Not one, not two, not three, not four, not five, not six, not seven, not eight, but 9 times. Can the market go up 9 days in a row? We're up 5 1/4 handles. We'll find out. Palo Alto Networks in the green off the highs for the session. Some other minor earnings reports to talk about. T3 Tuesday, 8:35. You are where you should be. Listening to Pre-Market Prep.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right. Good morning, traders and investors. We pick up right where we left off with that strong close yesterday. Up 4 handles, 56.34. You can see us inching toward the quad top over 5,700. The buck in reverse, down just a few pennies, 101.70. TLT up and down, down 13 cents, 97.76. Crude was at 80, trying to get to 80. Now we're heading back towards 70. That's up 9 cents at 73.75. Gold up 21.50, new all-time high, 25.62.40. Come on, silver. Silver up 51 cents, 29.81. And Bitcoin, it has to have at least a 2.5% move. That's up 2.66%. That's about $1,600 at 60,775. Let's bring in Triple D. Triple D, man, it pays to chase, Dennis. I'm chasing. I'm going all in.
It does.
Today.
Right now it pays to chase. AB, come on in here too. We're trying to decide on a title for the show here. There's no other title for this show. This could be a 9-day winning streak here if the S&P goes up here again today. 9 times. 9 times?
And we were talking about it.
Times.
We were talking about it on the pre-market show, the pre-market show. It's not just the Mag 7 stocks. In fact, some of the Mag 7 stocks are still, well off their highs. You look at the IWM has been perking up a little bit. Kind of, you've got this broad-based rally. You've got some value stocks, the Dow, doing well the past 8-9 days as well. So, that was like the last time we were hitting all-time highs. It was, a lot of people were concerned with the fact that it was really just, Apple, Google, Tesla, these Mag 7 names. Not this rally, though. So
broad-based.
Yeah, I mean, does that make it a little stronger? Do you think it doesn't matter? What are your thoughts on that?
Yeah, I think it helps. I mean, we were in the first half this year very dependent on the Mag 7, and it has broadened out, and we are seeing other, industries broaden out, which is not surprising considering that we're talking about lower rates. They're talking about a 50 basis point cut. We're coming
No, they're not going 50.
That's what, who said it yesterday? 50. Fed official.
Really?
Yeah, 50 basis points.
What's the tool saying?
Somebody said it yesterday.
22.5% chance that we'll get a 50 basis cut in September. But if you go out to November, it's, we might be 75 basis points lower than we're at right now. So by November, the tool is showing that there's an 100% chance that we'll be 50 basis points lower than we are currently.
Sorry, it was an Evercore note. It was an Evercore note that said that Powell is going to communicate that the Fed is open to 50 basis points. So Evercore is saying it's going to be 50 basis points. Sold to Evercore. You're saying it's only 25.
I'm saying I don't think there even should be a cut. I think that if Powell...
I think they should raise rates. Let's really kill inflation. Let's raise rates.
Yeah.
Mm-hmm. Yeah, raise them up. I don't mind the higher rates. I like getting in the
Interactive
Brokers account. I get that 4.83%. I was here 4.78 just on my extra cash that's sitting in there. My regular balance. I kind of like that. So I like the higher rates. Yeah,
higher for longer.
Higher rates forever. Let's
higher for longer.
I'm going to get the T-shirt. Higher rates, not for longer, forever.
Lock it in, man. Lock it in.
Lock it in because
all
rates
right.
are going lower. So what is the odds of the 25? Like 99% now? On that tool you were just at, AB. What's the odds on the 25 basis point cut?
For here, I'll just pull it up here so we can see it on
show us. Yes, show us.
All right, yeah, it's a little show and tell.
This
here
is the
morning.
driver of the rally now.
This is for the next cut. For the next meeting, September 18th.
Only 77.
Coming up here in less than a month. So it's a 77.5% chance that we'll have a 25 basis point cut.
That seems low.
Well, it's
77%.
You know why?
Chance.
You know why?
Why?
Because of the job. You got a
no, guys. It's 77.5% chance that it's a 25 basis point cut, and
right.
It's 22.5% chance that it's 50. So
there's a 0%
there's
chance.
A 0% chance that it stays the same. Yeah,
0.0. Okay, so they two them together. I thought, it was like at least 7. I see what you're saying.
That's why
so they're 100% cutting rates.
Yeah, and if you go out to November here, if we go out to the next meeting, there's a 0% chance that it's current. There's a 0% chance that it's 25 basis point lower, 60% chance that it's 50 basis point lower, and a 35% chance that it's 75 basis points lower, a 5% chance that it's a full percentage
100.
So there is 0% chance even going out to November that we're anything more than 50% 50 basis points lower. So this is just according to the CME Watch tool, not 100% set in stone, but that's what the data is saying.
Scenario analysis. What if we have like that unemployment number from last month was just a blip and unemployment comes down?
Well, I think so. From what and I guess Siegel and guys like that have been calling for cuts for a while, but for most economists, they would still say that because the interest rates right now are much higher than what the current inflation rate is, you still have room. You still have room to cut, even if the labor market remains, strong. So because you have that kind of disparity there between the current inflation rate and the interest rates right now, I think a lot of people would still say they have room to cut. But yeah, to your point, Joel, if we get more hot labor data, then it definitely throws some more question marks in there.
Okay. All right. Should we do some earnings?
Yeah, let's get into some earnings. Let's start in chronological order. So let's go with Palo Alto Networks first.
Because it's the only one, really.
Well, we got two.
Chronological, you can do alphabetical, you can really do anything. There is a couple small Lowe's this morning.
Yeah, I was gonna do Palo Alto. Then
I thought you were just gonna do just one earnings report, and was like, let's go in chronological order.
Yeah,
it's Palo Alto Networks.
So Palo Alto reported yesterday after the close. EPS came in at $1.51. That beat the $1.41 estimate. Sales came in at $2.19 billion, beat the $2.162 billion. Some strong guidance, announced $500 million worth of share repurchases. The outlook topped estimates. The stock popped after earnings, but all said and done, you're only looking, and it's only trading up about, it's trading up less pre-market than what it closed yesterday. So not a huge move this morning for PANW.
Very wild in the opening bar. This thing, believe it or not, tanked almost 20 points on the opening print. And I looked at the numbers and I was like, what? I'm like, why? And we're in a buy the dip market. So I actually went out there and tried to buy, but it was like 335 offer was the best. So some algo just hit all the way down to 323 and nothing really got offered lower. So then I'm like, I tried to go like 330 and there's no chance. And the 335 lifted and it was 345 bid. I was like, who? The algo literally, it was down the 20 points for less than 20 seconds. Less than 20 seconds and it was back green. I don't know what news algo was running, if they read it backwards or what it was, but like I saw a tank and I was like, oh, they missed. And I just looked quickly at the pro. I was like, no, this is pretty good. And then by the time my analysis had happened, the best you could have lifted was 335, and I don't even know if there was much there. There may have been 100 shares there or something.
Wow, I'll tell you some volume.
That's craziness, though.
So look at the volume now.
Yeah,
man.
yeah, because they hit out every bit. But then it's just empty books. So here's a good lesson. Like when you're looking at stuff like this trading after hours, it's basically the algo thinks it's bad, just hits every single bid. Now the book is just completely clear because they just cleared everything out. So now it's like, well, if new offers come in and maybe somebody just bought it and they're going to flip out. So you see, but the lowest offer that I saw, and maybe, I didn't, it's quick, eh? So maybe
Yeah, you're
somebody saw a
right.
lower offer, but the lowest offer I saw was 335. And I'm like, well, it's 325. I'm not paying 335. And then, I tried to go like 330, and then it was literally 335 was gone and was 345 bid. And I was like, man, some algo, like bring that up again, all those trades, Joel, so we can look at that. Blow that up because it's interesting to see. I don't have no idea who's running these news algos, but man, they do a really, really poor job sometimes. And can you make it bigger? Because I'm getting older. We have a lot of older listeners. I can't see that at all. But just looking at the initial prints, like right afterwards.
Let's see. This is 18. This is boom, boom,
Well, it's 4
boom.
o'clock. It came out right at 4 o'clock. So 1600.
Yeah, right here. 160. There's the close. Then a half a million, and then on that bracket from 05 to 10, right there, there's your volume. Your up volume was 146. Your down volume was 110. So 250,000 shares traded there.
Yeah, they just sweep out everything there, just pissing money away, like literally pissing away. Tony said he got 337. Great job, Tony, because it wasn't a lot of possibilities to buy it under the 340, but it was 335 offer for a split second, and I looked at it and I thought maybe I should buy that 335 offer because I was thinking all the way I want to buy this. I was like, I want to buy this. Paper trading, you kill it on that. I just bought 325 paper trading. Try to get those executed, those orders. That's why paper trading sucks. Don't paper trade.
If
folks.
we were on the trading floor together, I would say, Dennis, look at the August 12th low, 325.15.
You've been yelling it at me.
And you would have been
there. Get your bids in there ahead of time.
Get in there. Exactly.
If you had your bids in there ahead of time, right, you would have got filled. But it's always scary to have your bids in there ahead of time because that number comes out and it's a miss and a guy down. And then the thing's at 300 and you just bought 325 and you're like, ouch. Ouchie. Okay. So I never put the bids in ahead of time because you're almost in a lose-lose situation a lot of times. It wouldn't have been in this case, but if the news algos actually know what they're doing, it's a miss, you get hit. It's a beat, you don't get filled. So it's almost like a lose-lose. You don't want to be sitting out there making tight markets on a stock reporting earnings unless you get a violent reversal, which is what we definitely had in that opening bar.
So Dennis, scenario analysis again. If you would have gotten long, okay, and you wouldn't have flipped it out, right away. Looking at the upper right chart, where would have been a logical exit point? Looking at the upper right chart. And I'll give you a hint.
Well, probably the highs.
Well, no. What do we talk about gaps?
All right, we didn't get to 380.
No, there's a gap right here at 360, Dennis. 360. 359.82.
Oh, you're looking way over to there. I don't even see that gap. You got to go to the weeklies. You're going a long ways away. So I only was 90 days.
It was February. It's
February. Yeah, but I'm only 90 days. I'm looking at. I always start with my 90-day charts. I'm looking at my 90-day chart. But you said look at the upper right, so I see it now.
Okay.
Yeah. Right. Hindsight Capital's 2020. I mean, fading everything on this stock was making you money last night. Chasing on this stock was losing you money. If you panicked and sold at the bottom, well, too bad for you. If you panicked and bought at the top, FOMO'd and bought at the top, too bad for you. Or basically, just, right back down. If you bought option premiums, you're probably screwed there too, because I can pretty much guarantee you there's a bigger than 7-point expected move on this stock.
Yep. What about, did we already have the other companies in this report? Our other cybersecurity companies? SentinelOne, boy, that's a nice move. That's a nice comeback from June. What else do we have? Any sympathy plays, or is this pretty much?
Well, CrowdStrike, SentinelOne, you can look at all those. I mean, it's not a huge move, and maybe we should stop and talk CrowdStrike for a minute there because this bottomed. And, obviously, hindsight capital's 2020. You could kind of feel it like when it had that capitulatory day, and that was the day that, was it the day? It wasn't the same day, I don't think, that everything else was bottoming. But you could kind of feel it. Like it got up to 230, after the fact. And that was the buying opportunity. Like it's always hard to buy the stocks when they're going down. And everybody on Twitter bought it at 200. We know,
of course,
they're all liars. Yeah. But and again, the person that bought at 300 is silent too. So it's not necessarily liars. It's just a matter of if you did buy at 200, you're going to brag to everybody in the whole world about it 100 times. But the person that bought a 300, a 250, all the way down, they're just silent. They don't, because you can't lose on Twitter. You never post a loss on Twitter.
No.
It's never that great to try to catch the falling knife. The thing went 350, people tried at 300, people tried 250, it went down to 200. You took major heat. Logical bouncing point, the big 200 psychological level. But after the fact, that reversal day, that is the tell. When you get the 200, it opens low and then closes up near the highs. Key reversal that day. We have never, really looked back since then. So it's straight up 50 points since then. Since that, what you see the day I'm talking about, Joel?
Yeah, right here.
Yeah, on August the 5th. Was it August the 5th for everything? Was that the bottom for everything? August the 5th? Was that the same day in NVIDIA?
Was that what? Because it was two. Yeah, it was.
Yeah, it was August the 5th.
Yeah,
so it was D-Day. Everything bottomed that day. And in hindsight, capital again is 2020, but every single thing bottomed that day. So we know that. CrowdStrike, no different. But CrowdStrike was so washed out, and then you had the key reversal. So kind of logical that anybody who was short it was probably going to be scrambling cover. And then we've continued to move higher since then. Is the bottom and the low for the in CrowdStrike? Probably. I mean, I think if you get any lawsuits or anything coming like that, it might knock it down for a day, and then it's probably just another buying opportunity. So in CrowdStrike, I'm not chasing it up $70 from where it was a week and a half ago, but I mean, it's fairly confident to say that the 200 is probably, your low for the year. I'll say it right now. I don't know if it's ever getting back down there. It depends, if this washes out or if they get another cyber incident, where they have the software fail, then anything can happen. But, one time they usually forgive you, 2 times they never forgive you. So this is the one time, the big outage, obviously the stock got really punished. It was a darling, was not far from all-time highs before the incident happened. So I do think, there's an opportunity on pullbacks that, maybe you're looking at CrowdStrike, but it's gone too far now. Like a pullback would be down like 250. Maybe I'd start looking at it. But because somebody was asking me yesterday, look at it now, it's like, it's up $70 in 9-10 days. It's hard, man. It's hard to buy anything right now. And that's maybe why the markets continue to go higher, which is a tangent into the overall market.
Yeah. Just real quick before you do that, someone says, why are gaps filled? Going back this. It's usually because they take place on like news, right? And an overreaction. I mean, you don't know if it's an overreaction, and there's a lot of gaps that don't get filled. But going back to Palo Alto here, the reason you see some resistance or you see something filled is because a lot of people got stuffed on this day back in February. This thing had a low of 359.86, and when they were carting it up the next day, man, this thing traded down to 260. That's like a historical move. So all these people are like, oh, if this ever gets back to 360, I am getting out of this puppy. Also, the monthly highs are, wow, this is a big move, busting out, but filling that gap all the way. That's why it's just, they're created by news, they're created by an overreaction to an event, and then people trying to get hold. Not all gaps are filled, but you know what gap? Do you think this gap will ever be filled?
Starbucks?
Yeah.
Oh, the CEO, the recent one with the new CEO. It's hard to say. I mean, you obviously are in the honeymoon period here for Starbucks still a little bit right now where everybody's excited about the new, but now you're 5 days after and it's starting to leak a little bit here too. I mean, if I was long Starbucks and it popped 20% because it got a new CEO, I would ring the register. I don't think, again, this guy's done a wonderful job with Chipotle. So maybe he can turn the whole Starbucks story around, but there's a lot of fundamental problems at Starbucks. So you're giving you 20% instantaneous, instant gratification. I like that. I would have rang the register that day for sure. I thought and when it was 85, I thought it could go higher, but now you put 3-4 highs around 94, 95. I mean, you're at a point, where I'm actually, looking at, different pops every time this thing pops up a little bit. I've been playing it from the short side as day trades and overnight trades. So, yeah, I think, it's ring the register time for Starbucks.
What about, I would just say, and I don't know how far in the future here, but do you think that this what's it, Brian, how do you pronounce his last name?
Brian Nickel.
Brian Nickel. Do you think he's going to fix everything by October 31st?
Oh, if he doesn't, then he's done a poor job. No, I'm just kidding. So I will pat my own back because right when they announced that morning, I talked about Chipotle's mobile ordering and how during COVID that was like a big strong suit for Chipotle where it was able to actually do well while other restaurant stocks were suffering because their online and mobile ordering system was like so strong. And now they're starting to come out and talk about that Starbucks's mobile ordering system needs a lot of work. But I think they're like fundamentally different. At Chipotle, you have all the stuff there. So someone can order their burrito or bowl, whatever it is, and they make it real quick. With Starbucks, people will order these drinks online that have like 8 different things in them, right? They want
Wow. That's why I don't go to those places. You get stuck behind somebody that's like, oh, I want the whatever frappa chocolate
yeah, with
thing
8
and
pumps of
the
this
Wonder and
and
then
almond milk foam and this and that.
yeah,
And
like
people
give
will
me a
do
break, man. Get a
I've
cup of
seen some
coffee. Get the hell
people
out of here.
I've seen some people on the app with their drinks and it's like 10 different things and customizations. And then so say that's a $7 coffee and you have one barista that it's going to take them 5-10 minutes to make that like one drink. And that's what they're saying is a big problem right now is that these drinks are time consuming to make. Then they have people in the store waiting for their coffees. People's drinks are getting cold or whatever it is. So like, I think it'll be hard to just, change the mobile ordering system like a snap of the finger for Starbucks and fix it. So
It's the
uh,
pricing too. It's just people are a little bit, strapped. I mean, like it's expensive. And you have McDonald's, you have so much competition, which is what we've talked about, coming from everywhere for them. When McDonald's 2 years ago started really, building the McCafes, and obviously they started 5 years ago, but they really is there any like normal McDonald's left? They're almost all McCafes now, aren't they? Like every little town, like Canada's always 2 years behind the US. So, but all ours are McCafes now. There's very few like McDonald's with a play center and everything going on. They're all nice and sit down, little fireplace in there. I mean, they've kind of totally attacked Starbucks. And I think it's not coincidental, that when McDonald's is coming for you, it's a lot of firepower there. And the coffee is way cheaper. And people tell me it's just as good. Maybe you don't get all those specialty coffees, but if you just go in there for your regular coffee, McDonald's is a lot cheaper. And probably your Dunkin' Donuts, and probably I think just people are a little bit tighter for money. I think I think Starbucks, when the economy is like really booming and everybody's doing well, they're like treating themselves to Starbucks all the time. I don't think they're treating themselves. I think there's always people who are going to treat themselves to Starbucks, but I think there's some people who are treating themselves to cheaper coffee right now.
Well, I'll go back to
Bros too, France. The
yeah,
Bros is that coming out. Competition all over the place here. Starbucks
I love my Costco coffee. I mean, it is, man. I make that thing and it is brewed and hot and just this thick Colombian coffee, and you can get it. I mean, coffee futures too. I mean, you talk about input prices. I mean, yeah, I don't think that's what you want to see here. If you're running Starbucks, look at the coffee futures here. But we shall see. I mean, I'm expecting that by October 31st, that the new CEO, what's it, Nicole,
Brian
Nicole,
Nickel.
Well, no,
Brian
he'll never
Nickel,
remember that
Nick.
now. He missed his window period for that, so he'll always call him Nicole,
Okay, Brian Nickel.
and
We'll
sometimes
see
on
what he can
purpose.
do. Okay, all right.
Okay,
All
move
right,
away from the
let's go.
Starbucks. Bottom line is, I'm not buying
Tangent.
Starbucks, neither is Joel.
Let's go back to earnings real quick. We did have Lowe's report this morning. Of course, Lowe's following Home Depot's report last week. So Lowe's reported an EPS of $4.10. That beat the $3.99 estimate. Sales came in at $23.58 billion, missed the $24 billion estimate. I don't know if I've ever seen a stock trade this flat after an earnings report. It's down 46 cents, 0.19%.
There wasn't even a lot of movement really even in the, you go to the intraday chart, but I guess there was a bet 238, 246. Again, look at what we have. Like, you're seeing this again and again where the overshoot to the downside, the overshoot to the upside, and then we hang out right back where we were. I mean, you're playing these overshoots. There's some money to be made. They're scary to play, but there's some money to be made there. You just got to be, careful because some money you're going to get the one, and it's going to follow through, and then you're going to get crushed. But you go, up, down, and then boom, we just kind of stay flat. Just kill an option premium.
Look at that, Dennis. The app. I'm telling you, the McDonald's app. 99-cent large McDonald's coffee.
That's what I'm saying. Like people say, oh,
that's
nobody
like-
goes to McDonald's.
Yeah,
It's
but
not
that's-
true. I know multiple people that go every day to McDonald's for coffee.
Sorry,
They-
last thing on the Starbucks.
99 cents, Joel. 99 cents.
Yeah,
coffee.
it's water. It's brown water.
No.
The
Last-
McDonald's coffee? My
Yes.
wife is a huge coffee drinker. She says the McDonald's coffee is really good.
Maybe it's different in Canada.
Everybody says, oh, McDonald's is all trash. From what I hear, the coffee's good, though.
Burgers
the
are good,
food
too.
tastes good, too. Who's kidding who here? McDonald's is unhealthy for you, but the food tastes dang good. Anybody who says McDonald's food doesn't taste good doesn't eat a McDonald's. The food tastes good. If it was healthy for you, I'd eat it every meal. It tastes awesome.
What's your record? What's your record for eating at McDonald's? What's the most you ever ate?
Oh, I've eaten like 5,000 calories from there in one sitting.
Maybe, yeah, it's KB that.
Well,
He's the calorie monster there. He's still young and he can take those calories down. 5,000 calories. What is the meal to eat 5,000 calories?
I'm guesstimating right now, but I've eaten like 4 sandwiches from there in one sitting, like 2 McDoubles, 2 McChickens, fries, and a large Coke. I think actually, if you throw a shake in there too, that's how you really.
You got me on the shake. My record is after a 10. We did 2 5,000 meter workouts, 10,000 meters, and I didn't weigh very much back then. I had 4 quarter pounders and 2 large fries. That's my record.
A lot.
What is it? How much?
4
quarter pounders and 2 large fries.
Pound of meat.
Wait, and I weighed about $1.35 back then too.
Yeah, because when you're young like that, you can just take the food down. Where does it go? Like now we eat that and it just stays. It's like, oh, my belly feels heavy and I'm heavy and I'm heavier. And I actually go and skin the scale and I gain 3 pounds and it doesn't go away. That's why you can't do it anymore. When you're young like that, you young people out there, enjoy your life out there. All these health nuts, when they're like 19 years old and 18 years old, and they're like, I don't touch any of that stuff. You're missing the best part of your life. That's when you can touch that stuff because the food, it goes away. You can run. You're doing things. You're young. Your metabolism is just flying. Now I'm old and I wish I could do that stuff, but I can't anymore because I'm old and, heart and, metabolism's slower. So when you're young, go to McDonald's.
Going back to Starbucks real quick.
Let's get off these stocks.
No. Last thing. Did you guys see the concessions that Starbucks made to get Brian Nickel from Chipotle?
Too much.
So they offered him,
not too much. Joel, the stock went up 20%. All the other execs are like, going to be sell.
Huge contract and a $10 million signing bonus cash. But they also said, like, he lives out in Southern California, I assume near LA. They're like, yeah, you can keep living at home. You just got to fly up to the Starbucks headquarters like once a month or something. So he gets to work remote for like $100 million a deal. Meanwhile, Starbucks has required their other office workers, like the marketing executives and all this stuff, to come into the office in Seattle for 3 days a week. But their CEO gets to go hang out down in LA and is making like $70 million or whatever it is. So it's like, I guess that's what, for those big name CEOs now, these companies have to give more concessions and give them more freedom to even retain them or to even poach them from other companies.
Oh, yeah. To bring them over and poach them, you got to really get them. And there's been a couple execs. I was just looking at the insider sales. Thursday, August 15th, we got Rachel, who's the interim CEO and CFO, was selling 3,200 shares at 91. Thank you. And then you got CEO of North America, Michael Conway, selling 3,200 shares. That was last night, $94.03. So he says, thank you very much too. Cha-ching, cha-ching. They'll say, oh, well, that was part of a planned sale here.
Oh, yeah.
All right, let's, should we talk some Eli Lilly?
Yeah, let's stay
stock
on
just goes up.
Yeah, I mean,
it went down for a month and it goes up for a month. This stocks, they go straight down for the first half of the month and straight up for the second half. Bottoms everywhere.
There were reports, data coming out that showed that Eli Lilly's weight loss drug reduced the risk of developing type 2 diabetes by 94% in adults with prediabetes and obesity or overweight. So this is for tirzepatide. I don't know if that's the medical name for one of them, Mounjaro or Wegovy, or which one it is. But either way, it seems like every couple weeks or so, we're getting a report out that shows, oh, look at these benefits of the weight loss drugs. Like we didn't even know that it did this, so Eli Lilly trading up $17, about 2% on this news.
All the way back up. And this is trying to fill the gap, but someone's saying, I don't care about the gap fill. I'm a concentrated seller above right around 935. You miss filling the gap by a buck. I very important to get. It's through this resistance now. It's filling the gap, so there's only one other high to contend with here. 956.39 was the next daily high, but if this holds a bid here at 940, then buckle up. We're going to all-time highs. If it can't, look for a gap fill. Maybe you'll complete this seller here at this area. 278,000 shares, so maybe they're getting done, but they definitely wanted out being a patient seller. There you go, man. I'd make sure this hold. If you're buying this off the hop, man, you make sure it's bid a half a point higher, or else boom, look out below.
TNDM Tandem Diabetes Care trading down 3.7% here this morning too, and offered down pretty heavily. So just to look at the counterpoint there, I'm sure it's not a coincidence here where you get this data. I mean, is it a little bit of common sense though too, that if people are losing weight, that it's probably going to help with diabetes? Is not diabetes very much related to obesity? Is this an absolute shocking stat? Isn't this common sense that this would work? And I didn't read anything. I didn't do any research, because people always say Dennis shoots his mouth off because he doesn't know anything about this. Well, I'm a trader, so I don't literally have 1,000 hours a day to read everything in detail. I get the headlines and I kind of get the gist of it. But isn't it common sense that diabetes and obesity are linked together? So if people are losing weight, that's going to help with diabetes. Isn't this just like obvious guy says?
One of the types of diabetes is from gaining weight. The other is more genetic. But I think, and this is just me reading in between the lines, I'm not sure either, Dennis. But I think with these studies and the data that shows it, it makes the insurance companies more likely to pay for it, because it's saying that 94% in adults with pre-diabetes. So if someone is maybe overweight, or they're they're prone to diabetes, they might be more likely than to get insurance to cover this drug, because they have the data and the studies to back it up that, okay, this can prevent you from furthering developing diabetes. I assume that's the why it's good news for Eli Lilly.
Remember when that Dexcom got hit that day, and I said, if you buy it at 67, in 5 to 10 years you'll be making money? Well, it didn't take 5 to 10 years. This is a diabetes-related drug too here. So right,
and it's down today too. So you're going to see Dexcom down today too, for the same reasons that if Lilly's data is coming out. But what I'm arguing is, my point being here, that why is Lilly up $17 on something that would be obvious? I guess the market just prices in nothing. But yes. I mean, I kind of think it helps with diabetes too. Let's buy Lilly up 17 points. I kind of think this feels like an obvious thing to me. I don't know. I wouldn't be chasing this on this. I don't think. That was my point.
Good point.
Yeah, I mean, yeah. Again, I think it's a fair point. I think because I think a lot of these drugs were developed for diabetes in the first place, and then the weight loss part of it was kind of a side effect that became.
That's what John is saying. I don't know that. Again, I'm a headline reader. I don't know the details on this, but if that's the case, I mean, why is the stock up 17 points on this? It seems like at one point, this 2%. It's a pretty big move. I don't know if I'm chasing it.
All right. Well, it is about 8:35 a.m. I see our special guest of the day hanging out backstage. It is Tuesday, which means it's a T3 Tuesday. Today, we are talking to Sami Abusaad, the head of education over at T3. Without further ado, let's bring Sami back on Pre-Market Prep. Sami, welcome back to Pre-Market Prep. How are you doing this morning?
I'm doing great. Good to be back. Thank you.
Well, we've had an 8-day winning streak going for 9 in a row today. What are you thinking? Are you liking this price action recently?
I'm loving the price action because I'm in it. I'm benefiting from it. We had on August 2nd, I think, no, August 5th, when we gapped down, we had a 4+% gap down in the market. and I've been trading full time since April of 2007. And ever since then, I've never seen the market gap down 4% or more and not get bought. Not once. I don't think I've ever seen, except maybe during the pandemic, during
2008, Sami, I'll tell you, 2008, we had a lot of 4% down days that ended up down more. So there was a few in 2008, but you're young buck then. So you're probably the high flyer, and you buy it and it comes back eventually anyway.
You might be right, but
to your point, in the last like 14 years, maybe in the pandemic and COVID in March, like you said, but to your point, it's usually a good idea to be looking to buy stuff when we're down 2, 3, 4% as opposed to sell it.
In addition to that, the market was already dropping hard. So this was, to me, this was like a novice exhaustion gap.
Yeah.
And it was a good time to buy. So, but now that we're up a lot, I actually expected the market to come back in a few days ago.
Me too.
And it just kept going up. So now I'm looking for a narrow range bar. And once we have a narrow range bar on the daily chart of the market, the SPY, the Qs, whatever you use, and we take it out, then that would signal the reversal. That would be, that would be the time to sell or to trim some of the positions. That's what I think, at least.
You've been trimming into this rally now, though, like on all these stocks? Like, I mean, it's been a pretty impressive rally. I mean, I was looking at some stats this morning. NVIDIA, I think, is up over 30% from the lows. There's probably 50 major names, in tech like that are up 20% from the lows. It's been a very impressive 9-day rally here, Sami. So you are lightening up into this and not chasing.
I wish I hadn't, but
I wish I hadn't too.
Exactly. I wish I hadn't, but I have lightened up on some of the positions for sure. Not on Bitcoin, not on the TQQ, not on Ethereum. Those I didn't lighten up, but on everything else just about, and not on Robinhood. Those I haven't lightened up, but everything else I either sold already, which I wish I hadn't. I had NVIDIA, I sold it, or I lightened up. But it's been nice. It's been really, really nice.
So what do you do now? Like, let's say forget about the positions you currently have and you're lightening up. Let's say you're a trader and you're looking for opportunity here. Are you like waiting for the rollover to try to get short, or you just, looking for pullbacks to buy? How do you approach the market now that we've had this incredible 8-day rally?
Yeah, I don't think you look for pullbacks to buy. I think you look to short or to trim. But the problem is, for me, I don't have anything on my watch list that looks good short. I mean, I'm scanning and I'm looking for shorts. There's nothing coming up.
What do you like to see? You like to see similar to what you said with the indexes, the pop, a little bit of consolidation, and then a break of the lower end of consolidation? Do you ever look for volume? Like, are the buyer, like, where are the buyers? Like, give an example here. I don't know. I keep going back to Starbucks, so it's probably going to like 180 or something. But on that day when it had the CEO, I traded 157 million shares on that day. You know how much it traded yesterday? 14 million. 14 million. So you're going to need a whole round of buyers here. Is the volume something you look at?
So here, here's my take on volume. I think it's the most overrated item in technical analysis. There's only like 2 uses for volume. It's when you have capitulation, when the stock or the market is dropping really, really hard and the volume spikes. That tells you the last batch of sellers is probably out and the bottom is in. So it's great for picking bottoms and tops.
Yeah.
And there's a couple other uses, but that's about it. The only time I find volume is useful is when I'm trying to pick the bottom after, a really big drop or a really big rally. Because once the volume spikes, usually the bottom is in.
Yeah. You're looking at capitulatory events on both sides.
Yeah. If you look at the market, actually it's been rallying really hard on declining volume. Just take a look at it right now. The SPY or the Qs, look at the volume. Look how declining it is. Now, if you let the declining volume on the way up talk you out of being in the market, you've missed out. So I could trade without volume. I literally don't need it, with the exception of when I'm playing climactics, when I'm trying to pick the bottom or pick the top. That's the only time I really need volume. Again, there's a couple other uses for volume. When a stock is basing and the volume is declining, that's called continuation volume, which means the stock is actually going to break out in the direction of the trend that preceded the base. So that's good. And when a stock breaks out on really strong volume, we call that pro-igniting volume. So that confirms the move. But the problem is you see the volume after the fact. So it's of no use almost.
Yeah.
So to me, volume is truly the single most overrated item in technical analysis.
I completely agree. I actually don't use volume at all. I don't have it on any of my charts. The only thing I do is similar to what Brian says, is I have filters that scan for stocks, and I have a volume constraint on that because I don't want something trading by appointment only. If it's stock I don't know, I need volume. I need I need a stock to trade a few 100,000 at least a day for me to get in and out of it. So that's the only time I ever use volume. But on my charts, I have no volume. Like, it's not on there anywhere. I know Joel looks at volume a bit, but I don't look at it.
I
like the capitulatory.
I agree with Sami on that. I mean,
I do too. Sami making a good point.
If you're looking at the SPYs here, on August 5th, October 5th, we all know what that is, traded almost 150 million shares. Okay?
Capitulation.
Right.
That's it, because it's down a lot and then gaps down 4%. And look at the volume spike. That signals the bottom. So that it was useful that day. After that, no use.
What about so before you would get so you're just looking for another big down day like that to reload, or I mean if you have a big down day now on big volume, that's what you're looking for. So you're not using that as an indication as a top. What about, I mean, let's switch to fundamentals here just real quick. I mean, quiet run up into Jackson Hole. Do you is that ever something you factor in? Or you just stick with your charts and whatever. But I think that's why you're having a little bit of hesitation here in the markets. And any outlook on that?
I really only stick with the charts.
Okay.
I'm always curious about financial news because my background is accounting and finance, but I really stick with the charts because that's the only truth that I know for sure. Everything else is just subject to interpretation. So I don't buy into any like news events. Now, if I see the market running up really hard into a news event, that's probably time to sell because it's, the news is baked in usually. So if I have a really big move up, which we do in the market right now, into a news event, then that's not a good thing usually. I'd want to get out of my positions usually. Some of my positions are long term, so I don't touch them anyway. But the short term positions, those are the ones that I try to trim.
I want to expand on that. Do you have like a separate account that you have long term positions in? Because I have my long term positions in all a separate accounts, so I don't look at them. Because if they were in my trading account, I would trade out of them. Do you keep separate accounts for that?
I do have a separate account, but I have been trading even the long term positions in the same swing account. I did that with Tesla because it was a really large position and I didn't want to look at it. I was afraid, I'd mess it up. So I did put it in a separate account for a long time. But now all my positions are in one account, even though I have two accounts with TradeStation, but they're all in the same account at the moment. But it's a good idea. So you're not looking at it every single day. You're not tempted to get out of it. It's a good idea to put the long terms in a long-term account that you're not watching every day. So totally agree.
What, right now, Sami, as the market kind of heats up, we've seen a broader based rally, different, industries, smaller caps performing well. Have you started looking at other names outside of the Mag 7? Or are you still focused, more so on like the Teslas, trading the SPYs? What's your strategy been during this run up?
I think when the market itself is really moving, which is what we had the last few weeks, you want to focus on market related stocks. You don't want to look at things small cap or things that may be on their own page. You want to take advantage of the move in the market. So the focus has been market stocks for me. But I'm always interested in small cap because when they move, they really move a lot. The IWM has been a big disappointment to me because every time I think it's going to go, it ends up not going. this is the second time that I in 2021. IWM went flat all year and then finally broke out. So I switched out of the SPY in my 401k, put it all into the IWM, ended up being a breakout failure. The same thing happened to me not too long ago. It was like at the end of July. Yeah, exactly.
Yeah.
July 31st. I switched out of the SPY into the IWM because the IWM was breaking out, only to end up with a false breakout. So, right now I don't trust the IWM. I don't like it that much. I have traded in and out of, I don't care if it's a small cap or a large cap. I usually don't even know what the company does. If the chart pattern is good, I go for it. So, I have some small cap positions and I have some large cap positions. I have Disney, I have Baba, I have Tesla. So I have some large cap, small cap. It's a mixture. It all depends on the chart for me. But if if the market is moving a lot and I'm trying to catch the bottom or the top, I really try to focus on market stocks, the big names especially, because that's what moves. That's what's going to be moving with the market, typically.
Got it. And then, say we keep running, we keep going up. It's say we go for a 9th green day today. At what point do you start hitting where you think we've gone too far, too fast, and you start taking some profits or become, net short of where we're at?
I'm not going to be net short, unfortunately. I mean, maybe that's fortunately because I don't have any good shorts. But here's 2 ways I identify the top. So if we have a wide range green, like a wide range bar, so a really big up day, that will probably be the top because we've been moving up a lot. So you get a really big move up, then that's probably the last batch of buyers finally jumping in. No more buyers, the market rolls over the next day, probably. So either a wide range. So I'm looking for either a wide range bar in the market on the daily chart or a narrow range bar, because a narrow range bar, like a cross or something like this, that signals the shift in momentum. Once we take out the narrow range bars low, then I would expect the market to roll over. I always tell my students, when you're looking for the reversal, so you either look for, again, the capitulation, or you look for, it's like a driver making U-turn. You always have to slow down to be able to make the U-turn. So that's what I look for in the market, is slowing in the momentum, a narrow range bar on the daily chart. And then if we take out the narrow range bars low, then that signals the U-turn or the turn in the market. So that's what I'm looking for, either a narrow range bar or a wide range bar. More likely to get a narrow range bar because we already got an increase in the range yesterday, sort of a wide range bar. So I'm thinking today would be a narrow range bar, and tomorrow, if we break under today's low, would signal the reversal in the market, in which case I would start aggressively trimming what I have. Some of the things that I have certain positions that I will not touch, and if they come back down and they don't work out, so be it, because they're long-term plays. But I have some swing positions that I will definitely be trimming.
There you go. Sami, we've got this QR code up on the screen for our viewers to join your free webinar, which is not tomorrow, but on Thursday. What will you be covering in this webinar? What can viewers expect?
So we've been talking about mostly swing trading and, carrying positions overnight. What I'll be covering on Thursday is my favorite intraday strategy, which is trading gaps. The thing about gaps is that they create shock value. They trap traders. You get into a stock thinking it's going to go higher, and then the next day you wake up and you're down $5,000-$10,000. What do? So people start, and when you have 100 people in the same situation, you create, so you create shock value. People get trapped, and so they start acting out of emotion rather than cold hard logic. And as traders, our job would be to read the psychology and take advantage of it. So I'll be teaching and talking about gaps, which is my #1 strategy when it comes to intraday trading. It's almost all I do. I do the reversals, the climactics, but I do like one a day maybe at the most. Gaps, I do several trades every day, especially at the open. So oftentimes, like yesterday, I'm busy at the open, and within 15-30 minutes, I've already, I've made the day, like, I spend the rest of the day maybe giving back money or not making any money. So
Middle of the day stuff.
So I feel like all you need is the first 30 minutes of the open as a day trader. And with gaps, you can actually take advantage of the morning volatility and be done for the day within 30 minutes almost. So that's what I like about gaps.
All right. Well, Sami Abusaad, again from T3 Trading, thank you for joining us here on Benzinga's Pre-Market Prep. We love our T3 Tuesdays. Always some great guests from there. Sami, thanks again for hopping on the show today, and hope you enjoy the rest of your day.
Thanks so much. Thanks for having me.
Of
Thanks,
course.
Sami.
All right, guys. Again, we have that QR code up on the screen. We also have the link in the description of the video. I'll throw it in the chat as well if you want to go check out that webinar on Thursday. Thank you to T3 and thank you to Sami. Always some great guests from there. All right, guys, 10 minutes left. Some things we have not gotten to yet today. This is probably the least shocking thing that we've covered in a while. Boeing, more problems at Boeing here. Joe, we're gonna need to get the charts back up on for the crowd here, but Boeing trading lower after test fleet finding cracks in engine mounting structure. So, you know, you'd think the engine, you would want that to be mounted pretty securely on a plane. Seems pretty important, but there are cracks in that engine mounting structure on a 777X test fleet. There's also FAA issues safety directive for Boeing 787s after mid-flight dive. So you kind of have two headlines for Boeing here that aren't great, but the bad news at this point feels so priced in. I mean, the stock's only down 1.5%, a couple bucks.
That's just dead. It's like headline seller exhaustion, where you've got so many bad headlines that happen on this stock. It feels like every week that it's just seller exhaustion all over the place on this. So, you know, if this came out of the blue and the stock was sitting near the highs, the stock's probably down enormously on it. But seller exhaustion, it's only down $2.50 here. You know, it's kind of scary to come in and buy a stock when they're talking about, you know,
constantly.
All the issues they've got with these planes. But, you know, from a technical perspective, there's been so many bad headlines here. The stock feels like it bombed at 160. I mean, so now you get people who are short the thing. Oh, please come in a little bit more so I can get covered. I mean, I think there's going to be people that come in and buy it anyways.
I mean, this is just, I mean, a fake out stock. I mean, look at that move over 195 and everything looks good and it goes back down into the bottom of the range. This is in the absolute middle of nowhere. I think I'll give you the pre-market low right around 176 if you're looking for it to come down. 175.86 is your pre-market low, but trying to pick a bottom here between here and 170, you're just trying to throw a dart.
All right, some other headlines that we got to touch on real quick.
Sure.
We had some Tesla news. The EU announced that it is nixing some of its planned Chinese Teslas that were manufactured in China. I think it was going for all China EVs, but this also applies to the Teslas that are assembled in China. So Tesla getting a little pop on this morning, up $2.50, about 1.2%. Obviously, by Tesla standards, that's hardly a move at all, but still a positive headline here for Tesla.
I mean, it's back in favor and it's moving with the overall market, and the headlines seem to be helping it too. So obviously got some headlines going here too. I lightened up a couple days ago. Obviously a mistake. Shouldn't lighten it up. I still think that the robotaxi event's going to be tough to go. But I have a normal size position in it. So I'm kind of torn, you know. I'm happy that I'm long it still, but you know, obviously I wish I wouldn't have lightened up at 219.
This would be the place to lighten up. If you caught this bounce, or not necessarily lighten up, but long-term, short-term investor, you've had a big move here. Once again, this is a stock that, you know, it had the extra juice in it because I believe it was because of its earnings. But this is really important. Keep an eye on 226 today. That's the pre-market high. That's halfway back of this move. There's a couple other pesky highs in this just above this area. So big day for Tesla holding that 226. Dennis, we got some selling balances here. It's
Yeah, we
just
do,
it's
Joel.
yeah,
We
yeah,
do. There's a lot of them actually. There's not
yeah.
like enough that like you're like, oh man, but there is some like Bank America, which we haven't talked about yet.
Let's
Too.
talk Bank of America.
Warren sold another 13.9 million shares, so his selling is not done yet. That's spooking the markets because I think a lot of people thought Warren was done. Well, Warren was done for a while because it probably wasn't in his sell area. The stock went from 40 down to 35 and probably got too low. That he's like, well, I'm not selling it here. Now that it's come back up near this 40 and you can clearly see, there's an area here where it struggled for a while in May and June. You start to think like, oh, this is the Warren sell zone, and the market's, getting into that too. And he still has a lot of shares. So, I mean, if he's going to sell every time this thing comes near 40, that's going to put up a wall there. So I think you have your technical traders saying, hey, it's been a nice bounce from 35 to 39. If Warren is going to start dumping, every day that this thing's between 39 and 40, I don't want to be long it. And that's why you're getting this 1.1% sell off. Because for a while there, we didn't care when Warren was selling. He was selling it almost every day. Now we care again because people forgot about it. And now they're reminded that, no, Warren is selling the stock.
Wow, and this is Warren must be tuning in to pre-market prep and looking at the 50% retracement there because you are right there right now at this or you were there a couple days ago. So, he's probably targeting this 30, 39 to 40 area. It's going to take him a few days to go, but once again, here's the stock. Not back where it was in July, not like the S&P was pretty darn close to it, but we'll see. The JP Morgan, I thought I heard that got a downgrade today. I have not confirmed or denied that, but that's traded down $1.45 today. Whew, last few times it's been up at this level, it's had a hard time. Big run from the 190 area. Keep an eye on JP Morgan. When you're opening lower like this, first thing you want to see if they're just going to shrug off the downgrade or Warren selling, keep an eye on unchanged, the mark. See if you can get out at the mark.
I'm not seeing a downgrade in JP Morgan right now, but I'll let you know if that hits. I was just doing some, I was looking at some of the numbers here. So for Burke B, I was seeing it's
Daiwa Securities is who is downgraded JP Morgan. But it's so weird. So Daiwa Securities downgrades JP Morgan from buy to outperform.
Oh man!
I mean, and with a price and Joel, here's the price target: 240. I mean, these are like, it's so weird. Like analysts should have buy, sell, and neutral. And they want to have like in between ratings now. Like Daiwa's got buy and outperform, and then market perform. Like it's so weird. So Daiwa analyst Kazuya Nishimura, I think I did pretty good on that time, downgrade JP Morgan from buy to outperform with a price target of 240. So he still thinks the stock's going up. Yet this market and all the algos just read downgrade and they sell it down $1.41. The analyst is still bullish the stock, but not as bullish as he was. So that's bad news, Dennis. So that's why we sell the stock down.
Well, Dennis, you went outperform on Tesla. You didn't go full downgrade to.
I went to. Yeah, it's true actually, but I don't do ratings.
I was just gonna say I was looking at how Warren's done against the overall market in the last year. So not year to date, but in the last like 12 calendar months, the S&P 500 is up 27.38%. So 2738. Burke B is up 27.46. So basically the exact same Burke B and SPY over the last year. But I think I would rather buy Burke B here than SPY because I feel like it's a little bit more defensive against a potential downturn because Warren has some of these Warren has some of these value names. And it's like, all right, if you're not even trading that much in terms of growth when the market's going up, the Burke B is going up just as much as the overall market. But hypothetically, if the market goes down, it's not going to go down as much. I mean, I don't like, it's not groundbreaking science here, but I feel like buying Burke B or tailing Warren here, it wouldn't be the dumbest thing in the world.
I mean, buying Burke B has never been one of the dumbest things in the world. The unbelievableness that he has, been for, what is it, 70 years of investing. He's 93 years old now. I don't know when he started, but, it's probably getting close to 70 years. That's been the best thing to own is BerkB. Now, again, it just ran. Maybe you want to wait for pullbacks. I struggle to buy anything here. Same reason Sami was talking here. It's like, but it would have worked yesterday. You're definitely chasing at this point in time, but it's not like chasing doesn't always work. Sometimes it does work. It just more often than not doesn't work, and that's why I don't chase. I'm just a matter of playing the numbers. But BerkB is the same story. We were 10 days ago. We were 406. It's 449. It's up 10% in 10 days. How many moves, Joel, does Berk.B go up 10% in 10 days? How often does that happen? Happened in July almost. So maybe it happens more than you think.
Yeah.
So we had a huge move in July, then we gave it all back, then we had the huge move again. But it usually, I think you go further back, it doesn't happen that often. It did happen in July, which is crazy. So it happened in July and it happened in August. I bet you that's the first 2 times that's happened in a long time.
All right, well, it is 9 a.m. Thank you to everyone who tuned into the show today. Joel, who do we got coming on with us tomorrow?
We haven't had Mr. Fromhertz on in a while in the morning.
Oh,
so
good.
we're gonna have Christian.
Only when I sleep in late.
Oh, you know what? You've been doing pretty good lately.
I know, but he helped fill in that one day.
I know. That one emergency situation.
Situation. The emergency cut. All right. Well, yeah, looking forward to catching up with Christian Fromhertz tomorrow morning. Again, thank you to everyone who tuned in. Please smash the like, subscribe to the channel if you have not already. Thank you to T3 and Sami Abusaad who joined us today. We have live trading starting up right after this. Otherwise, stay green. Any final words, Dennis, Joel?
Boom. I would say I like what Sami was talking about, like a narrow range, a narrow range day, a couple days of consolidation here. Important to take out the pre-market high. What I'm looking right now, we're unchanged here at 56.30, so market's still in the side. I would say if you took out that pre-market low that was right near the last after hours print, there's a little bit of downside there. That's what I would look at. I'd be more prone to sell a breach of the pre-market low than I would to be a buy of the pre-market high.
All right, there you go. All right, guys. Again, thank you to everyone who tuned in. We will see you guys tomorrow morning.